What's up, guys? Philip at Trade Genius. All right, in this weekly Bitcoin Outlook video, we're going to take a look at a few things. First up is this chart here. We have this moving average. You guys need to be really aware of this moving average. We're going to get into that. It's been key resistance in the past for Bitcoin, so we'll take a look at that. We'll take a look at the Bitcoin gap chart. We want to discuss that a little bit more on these two gaps that may or may not show up on your charts. The crypto fear and greed indicator, we're going to take a look at those levels and see what that means for us. And then we're also going to take a look at the Bitcoin expiration coming up this Friday. That's on the CME contract. So without further ado, guys, let's dive into this video and check those things out.
Trade Genius.
Guys, really briefly, if you're interested in joining us in the room or want those indicators that we showed you in the previous video, you can check out our either special number 1 or special number 2. We have those ongoing for another 5 days or so. So just wanted to remind you guys about that. All right, so let's dive into this chart here. We have this Bitcoin chart, weekly chart. We're using the Brave New Coin Liquid Index because it goes back the farthest. So it's a weekly chart. You guys have to be very aware of this moving average here. This is the 50-period moving average. Notice prices coming up into it and hitting some resistance. That's pretty much par for the course historically with Bitcoin, especially coming out of the bear markets. And I'm going to show you what we mean. If we go back to the earlier point in time on Bitcoin, back in 2011 to 2012, you'll see what I mean. Okay, so what we're going to discuss is how price reacts. So we have coming out of a bear market move. Okay, we had our blow off top. So this is kind of like what we saw in 2017, right? But this is back in 2011. We're dealing with a lot lower prices, obviously. But we come back down, 93% pullback, and we bottom out. We come back up into the moving average here, this 50 weekly moving average. So this is a 50 period simple moving average. You can add this on your TradingView chart. Simple moving average, 50 period, and you're going to put it on the weekly chart. First move up gets rejected. This one actually went through, but notice we only got one weekly close above it, and then there was no weekly close over that bar. So that's one thing. If it does pop its head above it, you want to kind of see confirmation on that. Couldn't make another high on the weekly, rolls back over. But what you want to key in on is this second move back into it, and those are really where confirming that the next bull move or bull cycle is on its way. So a nice big move off of that through that, and really good returns off these second moves. We can look at the next one that happened. This is 2015. If we go to that chart or that time period, you'll see again price comes up. We have a pullback. Lows are put in, 86% pullback. Kind of ignore that. That was like a one-off weekly candle, blowout candle. But what you're looking for is the first concerted move up into that moving average. That one gets rejected. Okay, pulls back. Second move, boom, through, off to the races. Those second moves into those weekly moving averages have been really key as far as ending that bear market cycle and starting that bull market cycle. So where are we now? Well, we're basically kind of in that same situation where we've come up off of a big move up, right? Blow off move up, bear market, 84% pullback, okay? And now first move up into that moving average. So don't be surprised if we see a pullback here, guys, because historically that's what's happened. Even if we poke our head above that weekly moving average, let's say we probe higher into the 5,800 realm or maybe even into 6K, but if that only sustains itself within that week and we don't see any moves higher, expect that we roll back over, okay, and then back down. And that's perfectly fine, but really what you want to catch is that second push into it. That historically has been big money, especially swinging for the next 12 to 24 months, let's say. That's been really good returns. Okay, so I'm just going to look at that for this weekly update as far as price moves, because that's what we're going to concentrate on. The weekly 50 period moving average is at 55.32. Okay, so that'll be key to see how price reacts to that. I wouldn't be getting too aggressively long into this level because of the tendency for this to roll back over after reacting to that level on the 50 period weekly moving average. The next thing we want to take a look at would be the expiration on the CME contract. And the reason for that is because a lot of times what will happen is you'll see price, especially if price moves pretty aggressively into that contract expiration that it rolls over. So this red line is the CME contract that expires on the last Friday of every month. So that's what these red vertical bars are. Yellow vertical bars are the CBOE contract. Those are going away, volumes drying up. So those really aren't much of a factor in price anymore. But as you can see, we're heading up into it. So it would be interesting to see if we coincide with hitting that 50-period weekly moving average right around that expiration on Friday, see if that thing pulls back. It'll be very interesting to see, because those are a lot of, those are confluence of things coming together, and seeing that we get a pullback like that. In the past, when we've had decent moves up into that expiration, it's rolled over and it's kind of a counter move, so it pivots. So if you're moving, like here we moved down into it kind of sharply, and then it bounced on that day and then it continued to move up. Here we went sideways through it. So here we chop through it sideways and not much, but a lot of times if you do see a decent move up into it, you'll see a counter move. And this last expiration was kind of where it didn't really counter move. There was a move up into it. It kind of consolidated sideways and it moved up. That being said, there wasn't a ton of volatility around it compared to, say, this move up into this expiration or this move down into this expiration. But historically, if you get a decent move up into that expiration, there tends to be a counter move somewhere around that within a day or two. So I would just, heads up here, guys, on that, because, you don't want to be getting too aggressive into these levels, and because historically they've been pretty bearish. As far as crypto fear and greed, this is another thing that I'm keeping an eye on. If this thing were to move up into 70, over the 70 range, and coincide with butting its head into that 50-period moving average, again, over 70, those are spots where we've seen some pretty decent pullbacks and a big drop in the fear and greed. So again, the higher this goes, the happier people are, and then typically that signals a short-term top. Okay. All I'm saying is this is potential for a short-term top. I don't think it's the end of the world by any means. Just a healthy correction from this move up from the low 4,000s. The last thing is the gap chart. Gap chart, basically, guys, if you drill down to the 2-hour time frame, for example, you'll see these gaps show up. And notice this one, if we zoom in here, this one didn't quite get touched, right? It gapped open there over the weekend. Again, the gaps are because we're seeing movement over the weekend. These markets, the futures markets, don't operate over the weekend. And so you get a gap when markets reopen on Sunday evening, and Bitcoin's made a big move. So you get a gap on those charts, much like you get a gap on the stock indices, because the futures open up over the weekend higher or lower. Again, over here at 35.67 or so, we get a gap that didn't quite get closed. But here's the thing about these two gaps, and you need to keep this in mind. They don't show up on the higher time frame. So if you go to like a daily chart, there's no gaps really there. And what I mean by that, there's no gap between the next bar and the bar where the gap formed on the lower time frame. So here, no gap, but you do have a gap here on this one. You can see there's a gap here on those are going to have more weight, the stuff you can see on the daily chart. So just keep that in mind, even though technically on the lower time frames there is a little bit of a gap still there on those. On the higher time frames, they don't show up, so those don't necessarily have to fill on those smaller time frames, because the daily, there just really is no gap there. Okay, so just keep those in mind. Other than that, there's really no gaps to speak of. Everything's been filling like clockwork on these. So just wanted you guys to be aware of that as far as those gaps goes. I like to just touch base on those once a week. All right, guys, well, that's it for this video. Again, to recap, we are heading into historical resistance. As you can see, the 50-period weekly moving average is pretty key. A lot of people like to look at moving the golden cross, where the 50-period moving average crosses over the 200-period moving average, either on the daily or the weekly. But I think just looking at the weekly 50-period moving average is a nice indicator of coming out of these bear markets. So you can see there, crossed over, didn't look back. Over here, crossed over, didn't look back. And so now we're up against it. And again, this is a key level to be watching over the next few days. All right, guys, thanks for watching. Please hit like and subscribe, and I'll see you on the next video. Take care, guys. Bye-bye.
Trade Genius.